All right, good morning. Let's go ahead and get started with accounts receivable customer aging report. Today's agenda for the aging report. Number one, what is an aging report? In the registration form, I asked how frequent do you run or view this report, and I got a lot of never. So we'll start off with describing what it is. We'll go through how to run the report, how to read the report. So we'll look at some actual reports from Intacct. And then lastly, we're talking about what the report displays, but what does it not include? What transactions drop off an aging report? So the customer aging report shows us a list of customers who owe money to us and how many days past due their payments are. This is created from the invoices and or the debit adjustments we make inside of Intacct. It'll be strictly those types of balances. It doesn't include any third-party or external system data. So if we were using a system different than Intacct before, and we had our billings in that system, that stuff doesn't automatically show in Intacct unless you've duplicated that and put it inside of Intacct. This doesn't include journal entries. So like our payroll, receivables, due to, due from, stuff that is particularly the program monitors do by journal entry, the aging report doesn't show that. This is strictly an accounts receivable subledger and only shows invoice activity. In addition to showing who owes us money or how many past days their payments are, this will also show a list of customers who have unapplied credits and how many days it's been since that credit was posted. Those could be payment advances, meaning they've given us a payment without having a bill. It's going to be overpayments, meaning they've paid more than what was due. Or credit adjustments if we've issued a refund or decreased their bill to us in any way. So those are the two types of transactions that are shown in this report. The report does show this by aging period. So we can see here that there's three options really for us. 1 to 30 days past due, 31 to 60, 61 to 90, and 91 days plus. There's one option to just show the very past due customers of 61 to 90, 91 plus. And then a third option, which starts at 0 days past due, and then includes the rest of the first entry. So those are our three options we're going to choose for an aging period. How is an aging period determined? By one of three things from your invoice. Number one, the invoice date. So this is a screenshot from one of our bills. We can choose, while running the port, which we'll see in a few minutes, we can choose to base it on this invoice date. How many days has it been since the invoice date or transaction date? How many days has it been since that started and the payment has not been received or the credit hasn't been applied? The due date, when was the payment actually due? And so how long has it been, how many days have elapsed since that date was due? Or the general ledger posting date. So when we get into running this report, we're going to base it on one of those three things. And why do we use the customer aging report? Number one, it's going to help us keep track of outstanding payments due from customers. The last thing we want to do is sell our products or services and not get paid. Late payments can be problematic and disrupt your cash flow. It affects your ability to pay bills. And so I kind of have a little example here with, if we create an invoice, we're saying a customer owes us money. That invoice means we've accrued revenue. And for any of us that are revenue based, if you're TUC, solid waste, childcare, any program out there that relies on revenue, once we created an invoice, we've created revenue. We've accrued the revenue, even though we haven't gotten the cash yet. And we're going to base most of our budgetary decisions on having revenue. But if we bill somebody, it means we've provided goods or services. If we're Koya or KNI, we're selling advertisement on our radio programs. Our employees are doing the readouts. That costs us money to run a radio station. Solid waste is fueling their vehicles, maintaining them, doing all the upkeep needed for that. And we're charging our customers to provide those goods or services. We're paying for that. Money's leaving our bank accounts. And if we're not collecting the money from the customers, those unpaid invoices aren't contributing to our bank account, even though they're in our revenue. So this customer aging report is going to show us those instances of the bills that we've created but haven't received payment for. So if we're having difficulty with our cash flow in our program, this report is going to be a very valuable tool in identifying some of our solutions that could be out there for us. So let's get into Intacct for one example so we can run this report. If you haven't run the report, you can find this in one of two areas. An order entry where you create your invoices. You can go to customer aging and then to report. Or you can go to accounts receivable, customer aging, and then report. Both places take you to the exact same one. There will be no difference. So now that we're at the aging report, the first thing we need to tell Intacct is what periods do we want to use for aging. So I have it set at 1 to 30, 31 to 60, 61 to 90, 91 days plus. When is the report as of? Is it going to be today, or do we want to use a different day? If we were looking at the end of a fiscal year and we wanted to scale that back, we can say, you know what, select a certain day and then choose 9/30 of 21. Likely we're always going to be using today. So I can leave it at today. Do we want to base this on the invoice date, the due date of our bill, or the posting date? Three things. Can't go wrong with the due date. When was it due and how far past due has it been since that? The next area is the filters. Do we want to look at a specific customer, a range of customers, or if we leave this from customer and to customer field blank, it'll be all customers. We're going to choose this specific customer. Customer type. So for those of you who use customer types, childcare uses 3 customer types when they create their customers. Self-pay, state assistance, tribal assistance. If they wanted to report only through a specific group of them based on the type they use, they could choose that instead of choosing a customer. TUC has chartered entities, medical facilities, school districts, state facility, tribal programs. So if they wanted to only choose a specific type of their customers, they could do that too. What checkbook are we using? And what program are we using or looking for our outstanding invoices? So we have the customer is going to be Department of Interior, BIA. Our checkbook and program selection, which is required for users. And how are we going to format our report? Do we want to sort the report by the name of customers, the ID, amount descending, GL posting date, or general ledger posting date descending? So the DESC means descending. I like to sort by customer name, a lot easier to read alphabetical names of customers rather than all the other stuff, so we don't have to jump around. We can choose if we want this report to be by summary or detail. Do we want to include people who don't have a balance with us? Probably not. For printing purposes, do we want it portrait or landscape? And then finally, what dates do we want to display? So I've got invoice date and due date. You can click to add or remove any of the dates that you'd want not to be included. So if I just wanted the due date, I've got due date. And then lastly, I can give this report a title. So once we've put this information in, we're ready to view the report in Intacct. So we've chosen the summary option. So we can see on this report, here's the one customer we picked. Here's their ID, here's their name. We know that until the 1 to 30 day period of time, there are invoices, could be one or more, invoices that haven't been paid in 1 to 30 days beyond the date the invoice was due. So that's $829,000. We have $177,000 worth of invoices that haven't been paid in 31 to 60 days since the invoice was due. Let me make this bigger in case it'd be easier to read on your screen. This customer has nothing past due between 61 to 90 days or nothing past due between 91 days or more. So the total amount of unpaid invoices from this customer is $1 million. We're using a summary report. So from this screen, that's all we can get. We don't know which invoice is unpaid or invoices. So if we customize this report and go back to this report type where we can include detail, now that the report is finished running, now we're getting detail of which invoice it is, when that was due, and how long it's been paid since it was paid. So we can see it's been 56 days, which puts it into that 31 to 60 day category since this amount has been paid. And then it's been 1 day since these draws have been paid, so likely those funds are coming in today or the next couple of days. If we're managing the receivables for this customer or the funding source that this drawdown belongs to, it should raise a flag potentially that we haven't been paid for a drawdown now for almost 2 months. Did we not order the funds? Why hasn't this customer paid this invoice? On the screen for the aging reports, when we run the detail, we also get a link that takes us directly to the invoice that we created that generated this amount. So now we can get an idea of the funding source, the program, and all the other stuff that it goes to. And if you've got your sales going, you probably are going to have an attachment that supported whatever you sold. And from here, we can certainly print and email this, send it back out to our customer and say, where's the money? Why haven't we been paid? Whatever you have to do to start moving this along to get paid for this outstanding bill. And so this is our option to run the report. You'll be able to print this directly as a PDF if you wanted to print. You can email this to yourself or others, and you could memorize the report if you like the settings you chose out here. If you don't want to keep having to do that each time you come, if you memorize the report, you could run that instead. And then finally, you can process and store the report. They run pretty quickly, so you don't need to run it offline. But one of the things you get by processing and storing is this run report on. So if you wanted to come here and have this report, and I chose February 1st, it's going to store in Intacct, and I give this a name. And then the format I want it to be in. So if I choose PDF and click OK, reports being processed, check my stored reports for the report results. On February 1st, this report is going to run. My personal preferences are enabled to receive an email when stored reports are ready. So on February 1st, I'll get an email saying this report's ready. So if you wanted to set yourself up with a couple of weeks or months down the road of reports, so those are our options to run the report. We see a little bit about how we're going to read the report with the Department of Interior stuff. But how could we use this report and find payments maybe that we've collected and haven't received? That kind of stuff. So let's do that. And so we have solid waste billings. And if we run this report, which we're going to see detail, we're not going to include anyone with the zero balance, and this is based on due dates. And so we're going to see a few things happening. Number one, that's not an invoice number. That's, I think it's a cashier's check number. The date it was received, 157 days ago, we received a $37 payment. and we haven't applied that to any invoices since receiving it. The customer was billed on October 1st. The customer was billed on November 1st. Neither of those invoices received the payment. In November, another cashier's check was sent and not applied. And then in December and January, invoices were billed and they weren't paid either. So if we were going to send a customer the statement, in a couple of ways, we're going to tell this customer, you haven't paid your solid waste bill in almost 4 months. You haven't paid this bill in almost 3 months, this bill in 2 months, and you haven't paid this bill in almost a month. But we've also collected payments that we haven't applied. The value of the aging report, of course, is we can see that both of these things have happened. We can see that there's payments. We can see that overall, the customer's balance on the account is there. They have a credit of $3. They're owed $3. And this is a way for us to say that we need to apply those payments to the invoices. And now we can leave to the receive a payment screen and start applying those so that our customers don't appear to be late on their bills. This is one valuable tool we can do this. Otherwise, if you're looking where you create your invoices, you go to order entry, Tony, and we go to order entry and we go to our TUC workflow. In that workflow, you don't see the payments you've posted, especially if they haven't been applied to an invoice. So we're getting a value out of this report because this is now showing us both our payments that we're expecting to receive from our customers, and then the payments we've actually posted from the customers when we haven't applied them. So there's a question, is that correct to have the method of payment as the invoice? The invoice number for a payment is whatever the payment number is someone enters. So if it was a check number, money order, cashier's check, whatever that reference number is going to show in the invoice column. And just like the invoice number would show on this report. So if we have funds looking like this is a great report for us to see and say, great, we have some issues to take care of with this customer so we can get their account resolved. Or what happens if we make credit adjustments and we don't apply them, or maybe we don't have a bill to offset them? Same report, we're only going to change our customer and our checkbook program selection. So we're going to use ambulance services, IT's revenue funds, and we'll make no other changes to our selections. We're still going to have detail selected. And so here we are for the same report for IT. This number is an adjustment decrease. So this is a credit memo that we've issued to the customer. And we had 4 of them. One nearly a year ago, one dated for almost 200 days, one more than a year, and one approaching 2 years. Credits of $520. So according to this, that customer has a credit of $2,081 with IT. And so what that's telling us is either we owe this customer $2,000, or we've potentially duplicated adjustments that we shouldn't have, and now we have to take action to get these adjustments zeroed out, because we certainly shouldn't be carrying credits too long. So we have decisions we have to make with this balance. We can click on the blue hyperlinks when we detail the report so we can see where this stuff originates from. So we can start making our decisions on what we're going to do. If we're anticipating that we have a new invoice coming in and that invoice is going to be reduced by $2,000 on these credits, then maybe that's what you're waiting for. But some of these credits are almost 2 years old. And so we can see these numbers here. So it starts with ADJ, that means an adjustment. Could be an adjustment decrease or an adjustment increase if they're not applied to outstanding invoices. And so we want to be able to do that. We should be looking at this as frequent as we bill. If we're billing on a daily basis, this is a report we should be looking at on a daily basis. If we bill weekly, you should be looking at this weekly. Virtually anytime you create invoices, anytime you post payments, this type of report is our referral to see what is the health of our program. If we clear out the customer, we leave that blank, and so we're to UC, we're going to run this report. And if we wanted to do this by summary instead of by detail, we don't want this to be very long. When we come back to view this report and it's done running, we'll get a list of all the customers that currently owe money and where that stands for the whole life of our billing services. So we know that within the 1 to 30 day range, there's credits unapplied for $263. 31 to 60 day range, there's $600 credits that are unapplied. We have customers who haven't paid us in 90 plus days that owe us $26,000 overall. And then we can start resolving that individually by customer to say, do we owe this person $53,000? Or this person $2,000? Or why hasn't this program paid us $41 now for 3 months? And we can make our collections decisions on what we're going to do to start resolving the amount of time it's taking for payments to come in. If we needed to know the detail of that, all we have to do is hit detail, change it to a specific customer. If we don't want to see the others, just one specific one, you can do that and begin to work to resolve the issues you have with one customer. The balances on this aging report will match your trial balance accounts receivable balances. So if you're ever looking at your dashboard or your trial balance, you see what that balance for receivables are. This report will make up either the summary total or a detailed total of what's contributing to that balance. So for TUC in this case, their receivables balance is $25,000. So if they were looking at their trial balance or their dashboard, they're going to see that amount there. And if Tony needed to know who or what makes up this $25,000 owed to us, this is the report that's going to do it for him with very little effort to actually produce the results, rather than going through all of your invoices one by one. And so what types of transactions get removed from this report? Number one, when an invoice is paid and the payment is applied to it, the invoice and the payment will not show up on these reports because they've been applied, they've been cleared. Credit or debit adjustments, when we increase or decrease a balance and apply those to our outstanding invoices, those don't show up on this report. If you delete an invoice or delete an adjustment, those won't show up on this report. And journal entries do not show up on this report. This is all of our invoices that we create that sit unpaid or partially paid, or all of our payments we receive that are unapplied or partially applied, or any of our adjustments that we don't apply or partially apply. So this is all the outstanding work we have to take care of. In the registration forms, we had a couple of questions. I think the gist of the questions were, how important is the report for the program? Or what is the benefit of this report? If we're running these reports or we're not running these reports, obviously the importance of this is you can quickly and easily gather all the detail of what's due to your program. So if you're having difficulty managing your program, whether it's sending people on travel, paying payroll, being able to budget your funds, and you're a program that relies on revenue, this is one of the most important things you can be looking at on a daily basis to get a grasp of why those funds are not coming in or what's not coming in, so you can make a decision about how to collect on those. And that's the benefit of this report. You don't have to go through all those other invoices one by one. You don't have to hope someone was keeping a folder that they were printing all of these things and marking down that, yes, this thing got paid. Intacct is already doing that for you. And you can see that. What is your collections policies that say it's okay for someone not to pay for 90 days or more? And does that need to be changed? So that might be something your program needs to revisit. So thank you guys for your time. Have a good rest of your day.